These are our weekly pairs that we've been looking for throughout the week. If you are watching this video, you need to have watched the Sunday market analysis. The video is on the description below. It will be on the description below. So first on our weekly pairs, we have the USDJPY in our top 6. So let me go through the USDJPY and show you. Like I said, the USDJPY has reached its highest high there. Very clear that has reached the highest high ever at the top area. And after the USD JPY reached its highest high, it has impulsed down. Now what we're looking at right now, we form is a correction to get another impulse to the downside. So we're waiting for another impulse to go to the downside. You have the inflection point there, and we have the trend line there forming that bearish pattern. So it will be a high probable trade if that inflection point ray line and that trend line of that bearish area really coincide. So let's go on the 4-hour time frame to get a picture to see, to dive deep into the market. So going clearly into the market, it's very evident that the market has been moving to the upside. But as you can see here, lastly, where it has been moving to the upside, it hasn't been moving in quite a impulsive way. It's been moving a bit with less momentum correctively. Let me show you on the 1-hour time frame how this thing has been moving. It has been moving with less momentum to the upside. That's very clear. On the 1-hour time frame, you could see that it's moving up, then down, then up, then down. You can see at the top area there, after having this corrective move to the upside, what we had there at the top area, we formed a double top, which is a reversal pattern to go to the downside. Now it's very probable that we might reverse at that double top area there at that ray line, you know. But it wasn't advisable for me to take a risk entry due to the market nature, because the market is moving correctively. So because in a corrective market, the market could just continue going corrective, take you in, hit your stop loss. Then by the time you've taken many losses, then the market shoots down. And that time you've taken many losses, so you won't even consider taking it again. So now my advice for you is that you just wait for the market move to the downside, then get a correction below that area. It could be a 15 minutes flag or a 1-hour tight flag, then take the entry to the downside. You can take that continuation to the downside. But what's highest probable trade right now is if we break above that, whether we break correctively or impulsively, and then we wait for push down below that area, that'll be a very, very high probable trade. Very high probable trade. But even if we have a flag, a continuation flag above that ray line there, it will still be a high probable trade, and I'm highlighting it in green to show it's a high probable trade. So that's the USDJPY. Then the second pair on our top 6, what we have, this is a pair. I've taken a trade on this pair, still holding this pair. So let me show you how I've taken my trade on this pair. So I'm definitely gonna have to go to the weekly time frame here, because I had this double bottom, then we had this ascending channel here. You see this is an ascending channel, which is a reversal pattern. Then this double bottom, then we reached another, if we go to, you will reach another double bottom within this ascending channel. And on the 4-hour time frame, the market is very clear how the market has been moving. The market is giving us a nice, beautiful market nature with impulse move correction, then we're expecting another impulse to the upside. That's what we're expecting right now in the market. Moving to the 1-hour time frame, as you can see, moving right now to the 1-hour time frame. That's when I saw this tiny flag here that I saw in the market. I swear I took my trade here, still holding on this trade. We get the rejection, and that's it. That's when I put my my entry there. Then the market did trigger me in, and it triggered a little bit. It's been moving very slow. We didn't have enough progression on this pair, so that's what we're waiting for. So there's not much to this pair, because
I've already taken a trade on this pair, so not much I could say about it. We're just waiting for it to break above. We know very well that the way the market has been moving, it could just correct in, take us out, come for another touch, and then go up. That's what we know. There's a possibility within that. We see rejection. So if the candlestick really moves impulsively, I'm gonna move to break even here, or just maybe adjust my stop loss around here, just to reduce the risk. You know, just to reduce the risk within the market. That's what I'll be trying and aiming to do. So moving on our third pair. Well, that pair is not moving very nice. It's not very nice because we've been expecting two things for this pair, and our highest probable bet was that from this impulse, from this impulse and this correction, we have a double top here, then we go down. That's what we've been expecting from this market. Moving to the 4-hour time frame, you can see the market still forming momentum. I would say the market is still forming some momentum to go to the downside. You see, so we understand that the market could take a very early reversal, and this could be taken as a double top. And we have this clear impulse. As soon as the market could break below, I want the market to actually break below with clear impulse, like clearly see that, okay, the market has broken below. And then after the market is broken below, my stop loss will be there above this ray line, somewhere there, with the reduced risk entry below this pattern. That would be where I would want to enter this trade. But that's not a high probable trade that I'm looking for. That's just a value trade. So what I'll be waiting for is this market to actually impulse like the way I showed here, break below this area and come below it and give us this type of pattern. Any continuation pattern, either 15 minutes flag would be okay for risk entry. And what would be very, very high probable is that the market reaches the trend line here. So I will just be waiting for what the market really gives us. NZDCAD. Also, speaking of the NZDCAD, I was actually backtesting this pair. That's why you see a lot of blue lines there. So what we had here, we hit the trend line with an ascending channel. Then we had a clear impulse to the upside. You can see it's a heavy momentum to the upside. Now we're correcting to the downside and actually looking for impulse to the upside, right? So as you can see, we're moving correctively now. Now we're going to the 4-hour time frame to see that. But as you can see, we had this impulse to the downside. Now we're moving correctively, forming some ascending channel, but it's not a high probable ascending channel because it has 2 touch. 3 touch will be a clear ascending channel. So my bet on this pair is that the pair forms enough momentum because it's been moving very correctively. So it's been moving with low momentum to the downside. So it shows no progression yet to the downside. So this pair could just continue to trickle down, trickle down, trickle down, trickle down, trickle down. And then we'll actually wait for a push up and a nice correction here for reduced risk entry. I would advise not to take a 15-minute flag on this pair just to increase the probability because the pair has not been looking that good. If we have this type of flag, again, if we have that type of flag, this is the type of flag we're looking at. Now we could actually start moving all the way to the upside. I think that would really make sense if we have this correction. Even it would be high probable if it breaks out correctively, then comes back and give us this type of leg. Then we'll be waiting to continue it to the upside. That's my only bet on this pair. That's the only way I would ever take a buy on this pair. Other way, it's advisable just to leave the pair. You know, it's the NZDJPY. So this is the NZDJPY. See, also we didn't have uh, that's the 14-hour, not the 4 hour. So this is the NZDJPY. You can see what I'm saying. I'm looking for one tight flag, 1 hour tight flag, or a large 15 minutes or 1 hour bear flag. So I'm looking for 1 hour tight flag or a large 15 minutes or 1 hour bear flag. So are we looking for? You can see the market really gave us this progression to the downside. Now it's coming up to give us a double top. So depending on how the approach of that area of the double top is, it depends. That's how we're gonna take our trade. So if it's very corrective, that's what I've indicated here, correctiveness. We're gonna have to wait for a push down and then a continuation flag, then move to the downside somewhere. Stop loss, I think I've been too ambitious here. Stop loss could be anywhere below 40 pips. I think that would be a good stop loss. Looking at the reward, having close to 6% there, you can see above 6.5% to the downside. That's a good bet on the pair. So that what I'm looking for, all this pair initially could just break above and then above, hit the trend line, then come back below, give us the same thing, tight flag, before actually continue to the downside. I think that's also a very, very good trade to wait for in this market. So this is also a pair that I've taken. I've taken this trade last week. I think I released a video on this trade last week. I got taken out here. I got taken out here. I got taken out here on Tuesday. This party took me out of this trade. But still, as you can see, I've taken a buy on this trade and I'm holding it to the upside. I'm taking a buy to this trade. Let me show you how I've taken a buy on this.
So going to the daily time frame, we're moving into the daily time frame. Let's looking at it from the daily time frame. You can see that it has an impulse to the upside, and then you can see the bigger, larger flag that's forming to the up. That's a continuation flag. Diving deep into the flag, let's move to the 4-hour time frame so that we can see how I actually executed that trade. You see, I've taken a previous trade before. So you can see the market nature is very clear, moving impulse, correction, then we have another impulse and correction, then we are predicting another impulse to the upside. That's what we're looking for. Then on the 4-hour, that's on the 1 hour rather, that's where I've made my entry, returning back to that inflection point. There we had the rejection. You can see that we had a hammer there that rejected. Then I was supposed to take an entry just after the hammer, but I wasn't at the market. But luckily I've caught it while still going up at a very early stage. Then I've taken that entry around that area, so waiting for the market to push above, just above the area. So right now I have my stop loss at break even after I've seen the market looking a bit corrective. So I've moved my stop loss to break even because I'm looking for like another entry if the market forms another continuation pattern like that and moves all the way to the upside. That'll be a good entry for me to take another entry at that area. If the market gives us another correction, that'll be another entry. And remember, my stop loss is at break even, so I'm not over trading at that time. So that's the reason I moved my stop loss to break even, and knowing that the possibility. So what I'm looking for is the market to actually go above after our entry there. We're in some profit, so it's very clear. Moving on, our next pair we have the Euro JPY.
4 pairs on our wildcards. Let me just show you this on the weekly time frame. Why I anticipated this. We had this as our high, then this our highest high, then we broke it, forming that top, but the way we broke it, we're forming an ascending channel. You can see this is an ascending channel, and we'll be moving quite corrective. It's just this last leg, it's been very impulsive. So diving deep into the structure, you can see because of what has happened in the market, let's move to 1 hour so I can actually show you what I'm looking for. So at first I was looking for this, market just moved above, but I'm still looking for the same thing in this market. I'm looking for the trade to drop back into this 15-minute flag is totally okay. Then we have this correction here, then there'll be this correction here. Let me draw it plainly. Be any flag, larger flag, it's okay. Then take the move to the downside. Tighty flag, a tight flag, also it's good. Take the market to the downside. That's what we're looking for on this pair. We're looking for a drop back. Then we have another pair. What is the British CAD? And which has been moving structurally to the upside. You can see, but here we haven't. I don't think this is a very nicely structure unless we have this. Let me move to the 4 hour time frame and show you what would make this, what would justify this as a very good trade. Unless we have this market taking this as our low, as we have some clear middle structure here, and then we come here and we form some nice ascending, which becomes in line with this trend line. After the break there, when we get a risk entry somewhere there using candlestick confirmations, we get a risk entry there, looking for a trade to the upside. Looking for this trade to the upside. Think that's going to justify the trade. Because this whole part here would just be a middle structure. This whole part here would just be a middle structure. Then we have this correction. Then we'll be looking for this impulse down, impulse. So what we'll be looking for within the market. Then I think this pair is almost ready. I just had.
So now this is our last pair on our list. Now we have the British pound NZD. So as you can see, we had that high there, we broke that high, and the way we broke it in form of a channel. Let me just remove that. We broke the previous ray line there and formed that double top. That's a reversal to the downside. It shows the reversal to the downside. Let me just clear it. Let's go to the 1 hour time frame for you to see clearly what we're looking for. Let me just remove this previous trend line because it's no longer relevant. Let's clean our chart now. It's no longer relevant. Now having that double top, we've been moving correctively to the double top. Now finally we had that push down we've been looking for in the market. Been looking for the market to actually give us a push down clearly to the downside, and what we're waiting there, you could see we're waiting to form any flag. If we get any continuation flag, a 15 minutes flag would be fine. A 15 minutes larger flag, a 1 hour flag which would execute on the 15 minutes will also be okay, or you can even take it on the 1 hour depending on your stop loss. And we're just waiting for the flag to really shows itself and form fully. This is where we're waiting. So our stop loss there, so my advice is not to have a stop loss that's above 60, and trades like that, especially on currency pair, don't actually play out very well.
if you're comfortable with that, you
you
can
don't
take
really
it.
play out very well if you
And
take
then if it's
trades
big
over
enough, you
there.
can take it
But
at your
you can
steps.
take a risk entry if you have a large
Trade to the
enough
downside.
flag.
So
That
this is
would
a
be
trade that I'm
somewhere less than
working on
35
right now.
pips, which is be okay
Anything
if
can
the
be ready
flag
within
is
few
large enough
hours
on 15
before
minutes or even on the
usual
1
move.
hour. But we're still waiting for
This
continuation
is our
flag
trade
on that area to actually
recap.
go to the
Thank you for
downside.
tuning in.
And that's all for us. Thank you for
These are
tuning
10
in.
pairs we're looking.
They gon' love me for my ambition. Easy to dream a dream, though it's harder to live it. They gon' love me for my ambition.